All right, I believe I have a great guest today, Greg Mannarino. We're going to be talking about the stock market, the Federal Reserve, corruption within our United States banking system. I have Greg Mannarino here, and thank you, Greg, for being on today's show.
Thanks for having me. Great to be here. I've been looking forward to it. So let's go.
All right. Now you have a great history. I want to just share some of this with people, and maybe more of it will come out. But you ended up getting involved in Wall Street as a trader. You watched the good, the bad, and the ugly of Wall Street. You ended up going to medical school, becoming a physician assistant, joining the Navy, and helping out our country with the medical side of the military. And now, after living through 2008 and seeing how awful a wipeout can be, you've now gone into financial education. So I want to explore that a little bit more. But right now, we're dealing with a lot of fear around, is the United States banking system as strong as we believe? Last week, the major indexes were down 5 to 6% on the week, with fear that the Silicon Valley Bank was going to go under and it was going to cause contagion. And now we're seeing stuff with a few other small banks, and then with Credit Suisse. Do you see further issues within the banking system, or is the Federal Reserve and the U.S. Treasury going to get this under control?
Well, I number one believe that this is an engineered crisis. It's been going on for a very, very long time. Clearly, we're going to see, it's already happening, a consolidation of the banking system, which was the goal of this entire thing anyway. There's no way in this world or off this world that these banking regulators missed this, nor the Federal Reserve, nor the U.S. Treasury. They all knew this was going to happen here. These institutions here, again, I keep going over this, but about 8 months ago, it just clicked in my head. Okay, we have a failing economy. It's in free fall globally. People are withdrawing their cash from money market accounts, from savings accounts, with the savings rate in the negative here. So what do we got? Okay, we got, let's see, no deposits, no loans, and no deals. How could the banks possibly be doing well? And of course, what you would expect to see in this kind of a situation is the smaller institutions start to get hit first. And we're already hearing rumors of First Republic. This is breaking. This literally just came out. I talked to everybody. All right, the JP Morgan and Morgan Stanley might be buying First Republic, and there's going to be a more consolidation of the system. We just understand, we found out today, the Fed's going to pump $2 trillion into the banking system. The Swiss National Bank is going to be bailing out Credit Suisse over there. Again, look, this is what we're seeing here is again, something I believe that most of us knew was eventually going to happen. Look, there's a new system. We're in a big change here, like a metamorphosis is going on here, a consolidation of power with regard to the banks. So we're going to see a lot of this move forward here. And of course, the Fed's going to throw untold amounts of money at this, other central banks as well, to make it happen, because that's part of the new system that they are going to be rolling out, a central bank controlled system completely under their control with digital currency. I think it's pretty obvious where we're going with this, but they got to kill the current system first. And this is part of it, the economic free fall, the Fed raising rates into a dying global economy here, crushing demand, crushing the consumer. And we're just seeing it evolve. I don't think any of this is surprising. I think it's about to unfold faster here, and we'll see what comes up. But I think this was easily predictable. I've been speaking about this for a very, very long time, and now we're actually witnessing it. And I think it's going to be interesting to see how it plays out. Unfortunately, again, we're going to see more power concentrated in the larger institutions. Okay, the mega banks are going to get even more mega as we move forward. But it's going to be, what really is more interesting to me is to see what's really on the book, if we're even allowed to, see the books of these institutions here. People believe, I don't know how they come up with this, that all the problems that developed in 2008 with mortgage-backed securities and everything else here, and credit default swaps, that just magically went away, but it didn't. It's all still there. And as a matter of fact, it's probably magnified. And on top of that, You got banks here holding the investment banks holding treasuries, which are guaranteed to lose money here in this environment where rates are rising. And these institutions put the public's money or their depositors' money to work in these what are now obviously going to be toxic assets. So what is the Fed going to do about it? They're going to buy it all. In my view, we're about to see, like I said, a consolidation of this.
Yeah, so kind of like with these draconian COVID lockdown measures where they essentially wiped out 1 million small businesses, but the large businesses were able to gobble up all of that foot traffic and e-commerce and business. You're saying these smaller banks are going to be wiped out so that the larger banks can come in and buy their assets at a discount and become even bigger?
At a massive discount. I mean, are you watching? It was today, for example, the regional banks, they had a halt trading on First Republic because it cratered. And why is that? Is because these banks' assets are now going to go up for sale. And you got the big banks that are foaming at the mouth, knowing they're going to be able to acquire assets for nothing. And they're going to buy. Watch what's going to happen here. Just like with Bear Stearns and Washington Mutual, they're going to get in here, the big banks, and they're going to split it all up. They're going to say, okay, we want these assets, the good stuff, and the bad stuff is going to be put on the public's back yet again. That's what happened last time as well. And they got these assets for next to nothing. It's just a repeat performance. Before, in my view, it was just the opening act, 2008. They had to reprop up this whole thing, which they have with easy money. Into oblivion. It's just been an incredible thing to watch the inflating of a stock market bubble, a reinflating of a real estate bubble, only to allow this whole thing to again come down. Because what people don't understand is, I mean, this is where the real money is made by the investment banks, by the real institution, the big institutions here. They don't care which way the market goes. Most of them are going to probably bet against their clients anyway. Here we have this consolidation of power. And it's extraordinary. But unfortunately, maybe the people that follow your work, at least I hope so, and maybe the people that follow my work, at least I hope so, get it. They know what's going on, where they're being kept in the loop. At least that's what I'm trying to do.
Okay. So Janet Yellen was the head of the Federal Reserve Bank during the Great Recession. She's now been redeployed to be the head of the Treasury.
I like the way you put that.
It's the same actors. It's a revolving door. And she's saying, no, this time we've learned our lesson. I don't know that they have, but is Janet Yellen saying that all of these banks have been stress tested, they're safe? Is this a calming technique similar to when she said, inflation is going to be temporary and transitory? Is this all just, to ease our mind while they take money out of our wallets? Or are these banks really safe? We just want the truth.
No, the banking system, the whole system is insolvent. And I don't care how much money they want to pump into it with the $2 trillion from the Fed and whatever else they're going to do, because they're not done. This is just a mechanism to pull cash into the now to keep the debt-based economic model going. But absolutely not. They float out these figures, okay, these supposed authority figures to dictate to us how we're supposed to think, what we're supposed to wear, talk about. As a matter of fact, she came out today before a congressional committee saying that the banking system was sound. That was her exact word. Meanwhile, no questions about why is the Federal Reserve injecting $2 trillion into the banking system? You see, look, it's a show. It's a freak show. And I always tell people in those terms. But the fact of the matter is most people don't pay any attention to this at all. It's a terrible thing to realize that people have been, indoctrinated into a society of lies, and they just would rather be lied to than hear the truth. So, shows like yours and mine, I think are very unique, that we're allowing people to know the truth because they're not going to get it from the mainstream. I mean, at all. So, thank goodness for these kinds of shows out here, but absolutely not. And you can expect more of this. And there's going to be zero accountability. Absolutely none. Just like you brought up Yellen with the transitory and temporary. Well, that didn't work out. The peaking no less than 10 times, and then the sticky, whatever that meant. It's all just a nonsense. Inflation continues to rise. They know it. And this issue with trillions of dollars, trillions being pumped into the system is massively inflationary, but they can't let people know that as well. And most people don't think about it anyway. It's a shame. They just sit there and they take it like the boiling frog. And then when it actually hits them in their own pocketbooks, then maybe they wake up for a moment or two, but then they are lulled back into that sense of sleep, which they're all in. It's an incredible thing.
Yeah. I've seen this before in the pharmaceutical industry, within banking. I've seen this. We're seeing it right now. We have Lloyd Austin, who went from the Army into being the CEO of Raytheon to now being the head of the Pentagon and bringing all this business back to Raytheon. Same thing. We have Janet Yellen. She's into banking. She's put as the head, #1 most powerful person, completely fails and flops, loses people trillions of dollars. And then what do? They put her back in as the head of the Treasury. So it's a revolving door of people that are never held accountable. And yet their inability to be held accountable directly affects our accounting, right? We get overtaxed, inflation at a 40-year high. What are people supposed to do in order to fight back?
I love this thing. What you were doing here is the infinity symbol. I don't even know if you actually got that, but yeah, and yeah, 100%. That's what they do. They recycle these things because, see, they know the players. The players know how to play the game. How do we fight back? That's a great question, and I think I've been telling people, at least from a financial standpoint, if we realize this debt bubble is going to continue to inflate and they're going to create reasons out of nothing to continue to inflate, we need to be on the opposite side of that trade. And that means holding hard assets, in my view. I always tell people gold and silver, my favorite of all time. Silver is my ultimate favorite of all time. But, how do we fight back? Unfortunately, I'm going to say it again, we need a revolution, but we're not going to get one. There are too many people that are becoming dependent on the system, that have become dependent on this system. So because of that, and they're creating more dependency on it just so we do not have a revolt, so we do not have any kind of revolution here. Again, they really have played this so well. And I try to put a perspective on people like this. I'm like, well, we're living in kind of the side effect that central banks collectively have worked on from decades ago. So we're living in the past in many ways. They're years and years and years ahead of everybody. They have think tanks. They try to put this stuff together where they want to go. They've been working towards a goal for a very, very long time. Central banks, the Federal Reserve, wanting to be the lender and buyer of last resort here, wanting to own it all. It sounds like science fiction, but it's actually the truth there. So what happens is, people get stuck in looking at the current situation, thinking it's actually happening in the now, although it does seem real, like it's happening in the now, but all this has been planned out in advance, all of it. And we're quickly moving towards, like I said earlier, like a metamorphosis of the entire financial system, which is morphing into something completely different, a system of maximum control. To fight back, I mean, there's not enough of us here. I had hoped there would be. My channel, I got 240,000 subs, ain't enough to even do a damn thing. We would need collectively multiple tens of millions to people to understand what's going on here and to do something about it. And out of those let's say we had tens of millions between all of us truthers out here, how many of those people would be willing to actually do something about it other than just trying to I guess maybe come to terms with it? I don't know, but I think our forefathers would be rolling over in their graves today if they witnessed what's going on, unfortunately. But I really believe what I'm going to say, and I've been repeating this for years. We haven't seen anything yet, nothing at all, as to where we are going here. A new feudal system, extreme haves, extreme have-nots, a wipeout of the entire middle class here on an incredible scale here, more dependency on the system, a consolidation of power in the financial system. I mean, it's all these things that I've been talking about for years is happening now. I was told that I've been nuts and I'm crazy and it's never happened. Well, here it is. I don't know another way to put this here. And again, we haven't seen anything yet.
Yeah. Today, the European Central Bank surprised people by saying we're going to raise interest rates 50 basis points or 0.5%. People are wondering, what is Jerome Powell, the most powerful person in the world, going to do? Are they going to stay neutral and wait 90 days to see how the markets react? Are they going to do a 50 basis point hike just like Europe? Are they going to do a quarter point? What do you think the Federal Reserve is thinking? And what do you think the Federal Reserve is going to do?
25. I've already I made that call already. And my record for calling the Fed over the last decade, I've been wrong 3 times. 3. If I'm wrong now, that would be 4 in 10 years. So I think my record's pretty good. So we're going to get 25 here, and I think if what's going to be, this is next week, as a matter of fact, six days from today. If we get a 25 basis point hike, and I believe that's where we're going here, that's going to send a signal to the market that's already being flooded with cash here by the Fed to get in here, and this market's going to probably take off. I really do believe that. Again, it doesn't matter what's actually going on; it's the illusion of it. The illusion has become real, and you got this consolidation again of the banking sector. It's kind of all coming together the way they want it to go. But that's where I see it. 25 basis point hike. I would be absolutely floored if we get a 50. The market ain't gonna like that at all. I think we're gonna get a 25, and then maybe another 25, and then a pause. I said at the end of last year we're going to get a pause early in the year. It may happen after this next meeting. They have, I think they have no choice. They got to get behind a little token hike here, but it's going to be relatively. Look, it's going to be relatively meaningless, I think, at this point. And I think also what's going to really move the market is what comes out of his mouth. Its mouth will come out of it. Jerome Powell's mouth during the Q&A is going to really what's going to move the market, in my view. It's going to be interesting to see. I can tell you that.
Yeah, absolutely. So a lot of people in my community of 1 million, they have 401ks, they have IRAs. They've already sustained losses. They're hoping to stop the bleeding and get that moving again. Let's look 5 years into the future. Are you still long on U.S. markets, or do you think 5 years from now we're still in trouble?
I think people need to start looking at, well, the volatility in this market can rattle anybody. It's been up and down, but when I look at them, I never, as a matter of fact, focus on what the Dow Jones Industrial Average is really doing, nor the S&P 500, nor the NASDAQ. I want to look at the drivers. Number one being the debt market. Everything else, to me, when I look at the market, I say, okay, what's happening in the debt market first? Why do I look at the debt market first? Because the debt market is the driver of it all. Every single asset, everything, real estate, the equity markets, you name it, all derives value from what's happening in the debt market. So to put that into a perspective, the stock market is a derivative as to what is happening in the debt market. Okay, now understanding that, if we see, and I have a gauge on my website, traderschoice.net, this top of the second page is called the MMRI, Mannarino Market Risk Indicator. Right now we are in an orange zone. It's color coded with a number being high risk. Now, okay, that number is important, but it's about stability. If central banks manage to foster the illusion that the debt market is stable, okay, and the currencies are stable, at least on a relative strength basis, the market's going up. If, in fact, we see, and we're going to eventually get a cratering in the debt market, we're going to see a massive sell-off in the debt market at one point. Rates are going to spike in an uncontrolled fashion here. That's going to put enormous pressure on the stock market, and cash is just going to move. Where is it going to move to? It's a no-brainer. Okay, just remember this, people listening. Cash doesn't grow little money wings and fly away, or cash wings and just fly away to money heaven. No, it just moves. It's going to move into commodities, in my view. So I think, look, you got to be really savvy in this market but I think taking the guesswork out of it by watching the action in the 10-year yield, more specifically, what's the relative strength of the dollar doing? And again, I have it summed up in a little equation called the MMRI on my website there. It makes it easier. We don't have to guess as to what's going on. I don't think if they can stabilize the debt market, the stock market's going higher, and vice versa. So, but again, you can't, in my view, people can't go wrong here with having exposure to commodities. I have a free newsletter for anybody who wants it. It's 100% free. You can find it on my website. I had sent out at least 3 or 4 lists of exchange traded funds, which will give people exposure to commodities. So eventually, I think that's how it's going to play out. Meltdown in the debt market, pressure on the stock market, cash moves into commodities. It's very simple, in my view.
Okay, and we'll get a link to that so that people can look at that newsletter. But just real quickly, just so that people understand, when you say money is going to shift over to commodities, can you give maybe 2 or 3 examples of what that might look like?
Oh, absolutely, 100%. Well, what we should be looking at is massively suppressed assets, and these I think are the most. I think silver is the most undervalued asset in the planet. I've been telling people this for the longest time. I think energy, anything that's priced in dollars, commodities are priced in dollars, okay, and that's how it's going to work with regards to it. But it gets much bigger than that. I think what they're going to end up doing here, once we get a meltdown in the debt market, which I think is inevitable, and I think is going to be by design here, what we have to think about is how is the credit market going to respond to this? And it's pretty simple in my view. And I was talking to Michael Pinto at length about, you know who Michael Pinto is? He's a big Wall Street guy, has his own fund. And we were talking about, he's someone else you might want to get on your show. Michael Pinto is awesome. He and I were talking at length, what would this look like? And I've been warning people for a very long time that the entire financial system could potentially actually completely lock up. What people forget, or maybe they're not even aware of, in the last meltdown, the 2007, 2008 meltdown, it really wasn't so much that the stock market was tumbling. It was the fact that the credit markets were locking up. That's why they were injecting cash into the system to try to free it up. Interbusiness lending was stopping. If the system locks up, it just stops. There's no transactions. Credit cards don't work. Debit cards don't work. You can't go to the bank, can't get your money out or anything like that. It could potentially unfold to that kind of a situation here, something we need to be aware of. I'm not saying it's 100% going to happen. I think it's highly likely that it will happen moving forward here. But again, I think we're going to have a big clue with that. Why, if we're able to watch just a few metrics, I only look at a couple of things. Okay. People say, well, Greg, how did you make that call? Wow. How'd you make this? It's not hard. I just basically look at the drivers of the market. What is the debt market doing? By understanding that, we can pretty much gauge how cash moves through markets. It's how money flows through the market here, understanding that the debt market is the driver. So that's really, I mean, people, they sit back and people don't know where to look. That's the problem. They don't understand that the debt market is the driver of the stock market. Valuations, forward guidance, PE ratios, they don't matter. They don't matter anymore. When you have central banks that are willing to pour trillions of dollars into the system here, how does anything have a real price discovery mechanism behind it? It doesn't. It's all fake. It's just distorted. It just doesn't make sense to even someone like myself who does nothing but study this stuff around the clock. It's just out of control. But again, it's about control. We can say it's out of control, but everything is going exactly to the plan, I believe, that central banks have laid out a long time ago. They want to establish their position as world control. And they are definitely doing that right now. There's just no doubt about it.
Okay, so they want us out of control, but they're completely in control.
Yeah, they want it to seem like they want to keep people off balance by making people fearful. Number one, fear is an incredible control mechanism. Okay, I'm going to lose my money. My banks are going to close. What should I do? The first knee-jerk reaction was runs on these smaller institutions. People are pulling their cash out of these institutions like you can't even believe, and putting their cash into the mega banks. Again, going back to what I said, no deposits, no loans, no deals. Well, now the big banks are getting all the deposits that were in these smaller banks. Smaller bank stock is now cratering, although it initially jumped higher after they found out that the Federal Reserve was issuing loans to these banks, but we're not allowed to know which ones they are. Of course, we know which ones they are by just seeing which bank stocks went higher. And then when it came to light just today that these institutions are more than likely going to be going on sale, First Republic as an example here, stock falls through the floor. So the big banks get to buy these things for nothing. I wrote a whole piece on this. In fact, it's in the Trends Journal, how it worked out, how it would work out. And that's exactly what happened. I mean, history before it becomes history. It's exactly what's happening here. And that's what they're going to do. As I said, they're going to consolidate power in a massive way moving forward. It's going to be incredible, a really incredible thing to see, unfortunately. And the people are on the losing end of this. I mean, when power is concentrated in the few and they do this thing here, like you were talking, brilliant, honestly brilliant. Yeah. I mean, how do we win in this kind of a situation? Unless we had a revolution. I don't think we'll get one, though.
Yeah. Okay, one last question, then I'll let you go. This has been fun. If you had, you could only give 2 pieces of financial advice to people, whether that has to do with debt or the stock market or commodities or educate, whatever it is, what are 2 pieces of financial advice that you could leave with my viewers, and then we'll wrap it up.
All right, number 1, don't listen to a thing I say without doing your own research. Okay, if what I am saying makes sense to people listening, hold on a minute. What Greg is saying here actually does make kind of sense. I see this. But just do your own research into these things. People know the truth when they hear it. That's the truth. That's a fact in my view. And number 2, again, understand, as I was saying, that this cycle of interest rate suppression now going on since the last meltdown has created incredible distortions across the spectrum of asset classes. Nothing is real anymore, but realizing that gives us a tremendous edge. And in my view, as I said, I believe the most undervalued asset in the world, I have it all over my desk, is physical silver. It's everywhere. I love this stuff. I kiss it. I play with it. I mean, I just love it. I think that's what people, if you're going to need to hold one asset moving forward, I don't sell this stuff. So I'm not making money off selling silver.
I'm not either. I'm not either.
Yeah. I just believe this is what people need. Look at this stuff. I got here. There's all different pieces. I mean, I love this stuff. I think it's massively undervalued. And how do I make that call? How does Greg say, do I just conjure this out of my own mind? Am I just imagining it? No. What I want people to do is a little bit of homework, okay? Look at the Dow gold ratio, Dow Jones Industrial Average gold ratio, and then gold silver ratio. Just look at these things and you will see why I believe silver is massively undervalued. And I'll tell you something else. We all understand that this market is in la land. The market's going to come down, and it's going to come down big. Where's the bottom? No one knows where the bottom is. How does no one know where the bottom is? Because at the last meltdown, what did the Fed do? They started quantitative easing 1 at Dow 6,000. So they put an artificial bottom here. We could potentially hit Dow 6,000 in a full-on meltdown, or even lower than that. But I can tell you this, I believe, looking at the Dow gold silver ratio, the Dow gold ratio is going to be 1-to-1 at one point. So Dow 6,000 would mean gold 12,000. And just do the math. I believe it's also possible that silver could hit a 10-to-1 ratio with regard to gold. But don't take my word for this. Again, do your own research. Think about what I'm saying. Does it make sense to you? Does it not make sense to you? And that's okay either way. We'll still be friends.
Hey, Greg Mannarino, thank you so much. If people want to learn more, where can they get information?
Right on my website, traderschoice.net, all kinds of free stuff there, free chat room, the MMRI. Just take advantage of that stuff.
Great. Thank you so much for coming on today's show.
Thank you for having me.